Ladies and gentlemen, good day and welcome to Som Distilleries and Breweries Limited Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nakul Sethi, Director of Finance and Strategy of Som Distilleries and Breweries Limited. Thank you, and over to you, Mr. Sethi.
Thank you so much. Good afternoon, everyone. On behalf of our company, I extend a warm welcome to all of you for the Q1 FY25 earnings call. Despite the challenging macroeconomic environment, we have commenced this fiscal year with a strong financial performance. During the quarter, we achieved beer volumes of 86.8 lakh cases and 2.5 lakh cases of IMFL, resulting in a total income of rupees 5,137 million, reflecting a growth of 33% over Q1 FY24. Our flagship brand, Hunter, recorded a volume of 26.6 lakh cases, while Blackwood and Powerful recorded volumes of 8.2 lakh and 41 lakh cases respectively. Beer volumes increased by close to 32% over Q1 FY24, while IMFL volumes increased by 14% compared to the same period last year. Our beer realization for the quarter was rupees 550 per case compared to rupees 559 in Q1 FY24, influenced by higher sales of Powerful in Madhya Pradesh and Karnataka. IMFL realization for the quarter was rupees 974 per case, up from rupees 760 in Q1 FY24. We achieved an EBITDA of rupees 648 million with a margin of 12.6%, reflecting in a growth of nearly 30% over the same period last year. Our profit before tax rose by 31% year-on-year to rupees 560 million. Our net profit for the quarter was rupees 376 million with a margin of 7.6% compared to a net profit of rupees 337 million for the same period last year. We have made significant improvements in our debt position, with gross debt reducing to rupees 1,560 million and net debt improving to rupees 1,400 million as on 30th June 2024. This reduction has strengthened our balance sheet and underscored our strong cash flow generation capability. We are pleased to share that we have seen outstanding market growth in various markets where we are present, further establishing our position as a leader in the beer sector. Powerful secured its position as the second most popular and highest selling beer in Karnataka, while Hunter emerged as the single largest brand in the neutral market in Delhi for Q1 FY25. Our focus on staying ahead of industry trends and adapting to evolving customer demand has not only strengthened our position but also paved a way for continued expansion, and we are hopeful to sustain the growth momentum. Our focus remains on enhancing market share in our key markets and increasing our presence in high growth markets like Rajasthan, UP, Jharkhand and Delhi. Additionally, we aim to optimize asset utilization and generate strong cash flow. With that, I would now like to open the floor for Q&A. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Good evening. So, firstly, if you could explain on the overall industry situation right now, how has it been in Q1 and this last month of Q2 already, and how does it look ahead for the rest of the year? And then you could also cover some points what Som Distilleries is doing on key strategic areas for growth across all the segments and in all the geographies you are present.
So it's pretty long question. So the industry has been, there has been growth in the industry as well as in the key markets where we are present, but we have grown more than the industry rate of growth, and we hope that we should be able to sustain the momentum for the remaining part of the year also. The growth, we have been able to consolidate our market shares and grow in our key markets, as well as we have made substantial progress in the markets like Rajasthan, Delhi and Jharkhand in the quarter one. As for I would also like to dwell upon the capacity utilization of the plant. So for this quarter, we have operated at an annualized capacity utilization of 100% for both MP and Odisha. While for the woodpecker, because it was we had just completed the capacity expansion in April itself, so we have done about 70% of capacity utilization for the woodpecker, that is the Karnataka plant.
So based on this,
Sorry to interrupt, Mr. Rahil. Your voice is very low.
hello.
Yes, please go ahead.
Yeah. So based on all you said that you are gaining market share and you hope to sustain the growth momentum. So any outlook for FY25 revenue and EBITDA margins?
So I think we should be able to achieve a top line of between 1,500 to 1,600 crores net sales for this year, while our target for the EBITDA should be in the range of about 12 to 13%.
12 to 13%. Okay, I'll get back into this. Thank you.
Okay.
Thank you. Next question is from the line of Rohit Deshmukh from Vishwa Investments. Please go ahead.
Hello.
Yes, sir.
Can you provide insights into any market perception issues or external factors that might be contributing to the stock's decline despite strong Q1 results?
Sorry, sir?
Can you provide insights into any market perception issues or external factors that might be contributing to the stock's decline despite strong Q1 results?
I cannot comment on the stock performance, sir. I mean, but I think our results have been better than what the industry has reported so far.
Okay. Can you discuss any margin pressures or cost management issues that might be affecting investor sentiment?
If you look at what the peers have reported in terms of margins, I think our margins are slightly better than the competition. And the cost pressures also have stabilized as compared to the last 1 year.
Are there any macroeconomic factors or industry-specific trends that might be weighing on the stock despite the strong quarterly performance?
I cannot comment on the stock price, sir.
Okay. What is the company's current stance on stock buybacks and dividend policy, and could this be influencing investors?
We are on a growth phase currently. We we have also announced in the past that we will be doing a capacity expansion for our Visa plant, which should happen by early next year. Early next year, I mean it by Q1 of next year. So as of now, we do not have any plans of buyback or, like you said, dividend or something like that.
Okay. Thank you. I will head back to you.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and 1. Next question is from the line of Yash Dantewadia from Date Equities. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, you are.
Yeah, just wanted to understand on the raw material front, we've seen prices correct this quarter, right? And this year is expected to be good in terms of harvest, right? And your main raw materials, I'm assuming, is sugar, barley, and rice flakes, right? So my question is, don't you see your EBITDA margins improving further? 12-13% you've guided, but don't you think you're going to do better than that in terms of EBITDA margins because your raw material pricing is falling?
So I think the main price component or the cost is of glass bottles.
Right.
And the prices of glass bottles have been stable as I compare to June 23 and June 24. So they are maybe slightly different in price. And but our usage of glass bottles is more than what we get back as the old bottles. So that is the reason that, and now we have started operating in multiple states, so we don't have operations in a single state or two states. And there are certain states where the percentage of glass bottles which comes back is lower as compared to what we do in MP or Karnataka or in Odisha. That is why I have given a broad range of the EBITDA margin of 12 to 13% for this year.
Will you be able to share what cost component is the glass bottle for you in terms of the entire cost of production for a bottle?
Then I will be able to share that.
Okay. Can you also give some guidance in terms of premiumization? You said last con call that you are working on it actively. Has there been any movement in that front, or are you expecting to make any movements this year?
We have certain announcements to make on this regard. For confidentiality reasons, I cannot disclose the product launches which we plan to do in this quarter or the next quarter, but I think definitely you will see some premium products being launched from us.
Quarter is fine, but you're saying that we'll see a premium product launch this year, this financial year?
Yes, this financial year.
And when you say premium, what do you mean?
Premium means that maybe something which is more expensive than Hunter.
Can you give me a price range? Like what price range would you categorize as premium?
But I think maybe in the range of maybe something in the range of Ultra or something like that.
Sorry, in the range of? I couldn't hear you. I'm sorry.
It's Ultra or something.
Okay. I'll come back in the queue. I have more questions. I'll come back in the queue. Thank you.
Yeah.
Thank you. Next question is from the line of Vineet Agarwal from Aditya Birla Money. Please go ahead.
Yeah, hi. Thank you for giving an opportunity. Good evening, sir. Congratulations on good numbers. So I have a couple of questions. So one is, what is our capex plan going forward for the next couple of years? And what are the growth projections we are building in beyond FY25? And what kind of sustainable margins we will be able to maintain? And another is, if you can talk on about the market share in your markets and how we are seeing tractions there.
So, your first part of the question was related to the capex plan. So we have got one capex planned, like I was discussing with the previous caller, uh, in Odisha, which we should start by December of this year, and hopefully we should be able to complete it by April of next year.
Any amount, if you can, what kind of...
It would be in the range of about, I think, about 5 to 40 crores.
Okay.
And we are also eyeing certain acquisition opportunities in states where we want to enter, or we might even look at a greenfield, but maybe that is for next year.
And what are the growth, if you can, talk on the growth projections beyond FY25?
We are looking at a growth of in the range of about 25 to 30% year on year for the next 2 to 3 years. That's, I think, our internal target.
And the margins will be sustainable at this current...
Yeah, in that range which I indicated earlier, of between 12 to 13%.
Yeah, thank you. That's it. Thank you so much.
Thank you. Participants, to ask a question, you may press star and 1. Next question is from the line of Vivek Gupta from Novus Capital. Please go ahead.
Thank you, sir, for the question. I just had one query. Do you track capacity utilization, and how much is the current utilization across the plants?
Like I mentioned, if I just annualize the capacity, whatever has been the production in this quarter one, so we are at about 100% in Odisha and MP, and at the Karnataka plant we are at 70%. But obviously, because this is our main season, the capacity utilization would slightly come down for the remaining part of the year.
With the big seasonality in beer?
Yeah, I'm talking of beer only.
Yeah. So for Karnataka, by the next season, would the utilization reach 100%?
Yeah, I think we should be about 85 to 90%.
By next season. And after maybe in the second year, it will be 100.
Yes. And if things, prove to be very good, then we could reach about 90-95% by next year.
Okay. That's about it, sir. Thank you.
Thank you.
Thank you. We have our next follow-up question from the line of Yash Datiwadia from Dati Equity. Please go ahead.
Yeah, hi. My next question is regarding your recent expansion disclosure that you made. You said that you'll be using a mix of equity and debt. Can we know more about it in terms of size, and why are you diluting, if you're going to be diluting equity more, why are you doing so? Because you don't have a lot of debt in your books anyways, right? So I didn't understand the equity portion and the size of the capex. Could you drop some light on that?
You're talking of which disclosure, sir?
You recently made a disclosure that you'll be expanding capacity, right? Capex.
That was, I think, in context of Odisha.
Yeah, correct. Right.
Yeah. So, equity and debt would be that there are certain warrants which need to be exercised by the promoters.
Okay,
so
but not fresh, right? Not fresh dilution? You're not talking about fresh dilution?
No, not fresh dilution.
And your capacity utilization in this particular plant is around 50%, right?
The Odisha plant?
Yeah. Where you're expanding your capacity there, Odisha.
So it was for, last year. And same time last year also we had reached about 65%. And this year we have crossed 100%. For this particular quarter one.
So in Odisha you've crossed 100% capacity utilization?
Yeah.
Okay. And Also,
That is the reason why we need additional capacity in Odisha.
Also, why don't you do aluminum cans instead of bottles? Like a follow-up question from your last answer. Is the cost of an aluminum can more than a glass bottle?
No, it also depends upon the saliency of the can in a particular market. Because the demand of the consumer is very important. I mean, I cannot push the consumer from a glass bottle to a can.
So is that a trend that you've noticed till now, that consumers are more drawn towards glass bottles?
Yeah. So, I mean, in India, if you look at the saliency, about 75 to 80% of the total consumption happens in glass bottles.
Right. And this is a follow-up question on the premiumization part that you said. Since you said it's going to be priced somewhere around the Kingfisher Ultra, is what I'm assuming. My question is, how do you see the scaling up, the premiumization part? What kind of demand are you seeing on ground? What is the strategy? Could you share some points on that, like how you're seeing it play out, the premiumization?
If you look at beer, I think about close to about 15% of the industry is towards the premium segment. That's growing very fast, but the bread and butter of all the beer manufacturers comes from the 85% segment.
Right.
To grow or to have a better perception or a brand recognition of the company, it makes sense to have a premium brand. But we are not expecting much of volume to come from the premium brand. That is just to improve the perception and the image of the company. If you look at, I mean, I don't know how much information UG gives on the volumes of Kingfisher Strong, but I believe that about out of its portfolio, about 80 to 85% would be coming from Kingfisher Strong or the strong beer category.
Right. Can you give us the size of the capacity expansion? How much you'll be investing?
Sorry?
Size of the capacity expansion. How much money you'll be investing into the capacity expansion part?
About 35 to 40 crores.
35 to 40 crores. Okay. Thank you so much for taking my questions. Have a great day.
Thank you. Participants who wishes to ask a question may press star and 1. Next follow-up question is from the line of Rohit Deshmukh from Vishwa Investments. Please go ahead.
Sir, can you elaborate on the guidance for the upcoming quarters and any potential challenges that might impact future performance?
I think like I have indicated that for the full year, we are getting guidance of between 1,500 to 1,600 crores of net sales.
Despite this coming quarters, September and December, where beer consumption is low compared to June and March.
Yeah, because we are, seeing good traction of our products all across the year.
So you are telling that you will maintain the current run rate in upcoming quarter also?
I am not commenting on the run rate. I am just giving you a guidance that we should be in the range of 15 to 1,600 crores for the full financial year, the current one.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next question is from the line of Chirag Singhal from First Water Fund. Please go ahead.
Yeah, thanks for taking my question. Congrats on a good set of numbers. So just wanted to understand more from a growth perspective. So we have been growing, at 20-25% kind of growth rate. And for this year also, based on our guidance, the growth rate comes to around 20%. So what is the industry growth rate, and how we are able to, grow at 20-25% growth rates? And going forward, your move towards premiumization and everything considered, what is the sustainable growth rate that you are looking at, maybe from a 5 to 6 year perspective?
I think we are a growing company, and we have got an exciting team on board. We have got good products. We have established brands which are recognized by the consumers. We give good taste of liquid in our bottles. And we have been able to maintain our market shares in our key markets where our plants are, and we continue to grow in our new markets. So I think that's how we have been able to grow much faster than the industry. And we, on a sustainable level, I think for the next 3 years, I'm pretty sure that we will be able to maintain a growth rate in the range of 20 to 25%.
Okay. And can you also share the industry growth rate, like the regions that you're catering to? Like what is the industry growth rate?
Industry should be growing by in the range of about 8 to 9%.
Sorry?
8 to 9%.
Okay. Got it, sir. Thanks. That would be it from my end.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Nakul Sethi for the closing comments.
Thank you all for joining in the call. We are pretty confident that we should be able to maintain our growth rate. That's it for me. Thank you so much.
Thank you. On behalf of Som Distilleries and Breweries Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.